20. So this is not the stock of choice right now in the markets towards the bull side. Apple did pretty well. We found another decent day of bid, ended up 0.21%. It did drop in the morning and it got back to the wicks and we saw that kind of close there, but nothing much to report here on Apple. It's neither at a 20 moving average, which has found previous resistance. It's in the middle of literally nowhere. It did kind of fill that wick to wick gap though. Let's move over to some other markets, semiconductors. Now, this is the first case we see an island. We've got a market that has gone bullish, as in like it's gone bearish, sorry. It's made some nice structure and then it's gone bullish. Now, we saw a similar situation back over here in July. And this is what we call an island reversal. Effectively, the market's come down, it's gapped, it's structured up and formed some form of accumulation base, and then it's gapped to the bull side. Now we've seen a day where it wasn't even able to get down. It found demand, it found bid, it found buyers really fast. So that's pushing towards the bullish idea here. And semiconductors are often a lead here in markets, so that's what we've seen. Let's move over to the indices. We've had big, strong bid come out for the FTSE. It's held this level, the most important zone for it. We've got alerts underneath just in case. And it's really done well because of OPEC as well. A lot of energy stocks in the UK, and they're all firing off that level. The same goes for the DAX. Of course, a few big kind of older school kind of businesses here. With the reassurance in the financial system, although it's counter logic, we've seen those kind of pickups. Could we be returning back to our beautiful trend line here for the DAX? It seems potentially likely, and let's now have a look at it based on the markets. First up, SP500. Let's have a look at the SPX here. Notice a very similar island reversal. Now, we spoke about this. We called this one out previously back in June and July, and we talked about the idea that it would bounce, move down, and then ideally find bid. Now, we're looking at a similar scenario. We've got here a big island. We've got a sell-off that did occur in the previous session, but it found buyers really quick. I would have liked to see it come down more, but because it didn't, it proves this island kind of concept. And we've got to be open to the idea that this market could squeeze some serious levels. Now, where are those serious levels sitting? Well, the first up one is sitting, of course, around that 39.20, which is in here. And you've got to be open to that one. The second squeeze, a really extreme squeeze, would be pushing that 4100 narrative. And if we get the market into here, the more it squeezes, the more you want to place a big short on it back down in. But if it does squeeze heavily, especially if the thrusts continue, the way that this market's picking up continues, you have to be open that if we get that pullback later on, which I suspect we will, that all of a sudden this bull case becomes more likely, more possible. So don't worry, bears, don't fret. I believe there's levels for you still. But based on the last 24 hours, there's a really good chance that buyers will commit to this. We saw them commit in the previous session. We saw them, of course, commit previously back over here on the left-hand side. And let's have a look now at the futures market. So you can see there's a decent amount of confluence around these levels up here. We've got that previous structure. We know 39.20 held quite a lot of orders in the past, so it's probably going to again. We see the pullback that happened in the last session and then a strong bid that came straight through. Ideally, well, for a lot of us, we would have hoped it would come down to a 36.80 and then find the bid. It wasn't to be. It just went bang up. Now, if you're a bear and you're thinking, well, I hope this turns around now, until you get underneath that 37.20, you can't really short it easily. You either need it at a more extreme level, you're either going to have a tight stop loss, or you're waiting for it to get underneath here and then waiting for that kind of structural move down. If you get this, okay, cool, things change. But at this stage, at the time of recording, we're looking for a new high and a new high to probably push the narrative up to that 39.20. You've got to be very careful here. Now, some people have said, well, this is the last resistance. Absolutely, it's possible that it does find it here. You could try to short it if you wish to, but the breadth, the thrust, the bid rate, all of these things are going against you from that under the hood kind of market stuff. The US 100 is similar. It's kind of front loading here. You can see again, there's some level that could be a bit of a concern, but once you clear this, boom, up till this level seems very, very likely. That's a 12,000 on the NASDAQ. And to weaken here, you would need to go underneath here, pull back, and then look towards shorts. That would be the strategy that would be probably the best one here on these NASDAQs. Of course, it's just hypotheticals, guys. Practice your own risk management, etc. And don't, take anything in particular from these things. You know what I mean? It's general educational stuff. Let's look at Bitcoin. What do we got going on here? Well, Bitcoin is interesting. It's closed at a high. It didn't wick like the previous supply. And if this stock market goes up, Bitcoin should come with it. And where's the next levels for Bitcoin? Well, this is the problem. They all synergize together. You're looking at like a 22,500 for Bitcoin. Big volume transactions here. A few people have sent me messages saying that some big wallets have gone back and they've gone off the exchange and they've gone back into storage. So is that showing you bullish momentum here on Bitcoin? Certainly something that's open here, I think, in the charts. If you haven't already, come and follow us over at FX Evolution. You'll see we share a bunch of things on Twitter. So definitely follow us over there. And of course, for the news for the week ahead, this is probably what's going to move these markets. We have some big data coming out, and that all happens on Friday. The non-farm payrolls, the jobs numbers for the US. And don't forget that next week, when we go down here and we look into the week after this one, we have PPI coming out 8:30 a.m. on the Wednesday, October, the FOMC meeting minutes, and the most important one here at the moment, the CPI numbers. So they all come out next week. So we're probably going to push to some form of extreme ahead of these numbers. Will that be a 3,920? Will that be back down into the lows? We don't exactly know, but from thrust, from breadth, from bid, it looks towards the bullish side over the next couple of days. Although that may be counter logic to how many of us think out there. The macro data looks tough. Everything looks bad. There's so many bears in this market, and clearly based on the under the hood, we're seeing those thrusts. Good luck today, guys. Make sure you, of course, always practice risk management in the markets. And if you're interested in finding out more about some of the courses we offer, you can do so over at www.fxevolution.com, or the links in the description down below. Subscribe, smash the like button. We'll see you in the next one. Bye for now.